Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options. Some of you might be familiar with me by now, but for anyone that might be joining us for the first time, welcome. It's great to have you with us. I'm going to be facilitating the session tonight with Rob Roy, but we need to go over some important housekeeping details about the session first. So first and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there, or certainly feel free to take a screenshot of it now if you like, but that's the main point to take away. All right, so I'm pretty sure most of us out there, again, are familiar with the Q&A process, so I'll just leave that slide up there for review in case we need any clarity there. But other than that, that's all of the important housekeeping details. I'll be around to interact in support, of course. So without further ado, let's start talking about some more interesting stuff. More bad news for the banks today, and yet the market held in fairly well. Is the correction over? I wonder what Rob has to say about that. And of course, very excited to interact with you all. So thank you for joining us for this live session. And at this moment in time, I'll introduce the man of the hour, Mr. Rob Roy.
Hey, Zach, how are you tonight?
I'm doing great. How are you, Rob?
Melting here in Florida, but other than that, okay.
I can imagine.
Yeah, I understand for the next few days, there's going to be no rain. And if anyone's ever spent any time in the summer in Florida, you already know that if we don't get any rain, it's pretty rough. And then you add these unbelievable temperatures on top of it. It's it's going to be a brutal next few days. So anyway, glad to have everybody. Welcome to TradeFinder Live. As you can see from the chart, we have had a little bit of a move down and kind of a small bounce back to the upside. Zach asked the question, is the correction over? And here's what he's talking about. So I'm going to bring up right away. So I'll just kind of change the script a little bit and bring up the KRE, which is the regional banking ETF. And you see the downward move today. SBC Global came in and downgraded the banks on top of the downgrade that we had gotten already from Moody's. Perhaps there's something they don't like. I kind of borrowed that from Joe Kernan, who does the early morning show on CNBC. He always kind of mimics how the analysts seem to come in after the news comes out and makes their news. And I wonder if there's something they didn't like. So big down day in the regional banks, but as Zach said, didn't seem to worry the markets too much. We did finish on the low of the day, but we opened higher even after that news. And if we take a look at the 10-day moving average, you can see that we tapped the 10-day moving average on the high, but we are still below the 10, 30, and 50-day moving averages. So we're below all the major moving averages. We had gotten a little bit oversold here on the 18th. So a little bit of a bounce back. How many times have you heard me talk about the 10-day moving average? So that's exactly what's going on now. You look at the wave forward, 35%. Let's just round it to the 38.2% fib level. Is that enough? Is that enough to stop the downward move? I don't know. You could say that it could have been an uglier day with more bad news from the banks, especially with that big down day on the KRE. 440 was the first level that I mentioned. We already passed that. The next level I think we have to watch is 420. It just kind of feels like that's where we want to go, especially with the fact that we're still under all the major moving averages. So, there's not a whole lot. There's a tiny bit of support right through here at 430, which did hold on the 18th. So you got to give it that. Is that enough though? So right now we're just coming back up and testing. We broke 440. We're testing that level. Can we hold it? As I said, it still feels like we want to come down and test 420. That was such a big number for so long from a resistance level. And the fact that we're moving to the downside, we still have Jackson Hole coming up. And Zach, I'm a little surprised, and I imagine all of your TradeFinder friends are going to bring this up, but what's coming tomorrow with Nvidia. So let's just go ahead and bring that chart up. And we had a big move to the upside today, gave some back tomorrow. So we've been talking about and questions have been asked whether or not it's time to try to go long Nvidia. So I'm kind of moving ahead to the Q&A, but is it time to go long in front of the earnings report? And I'm just going to say the same thing that I have been. Please be cautious. Yes, they are the leader. They're the GOAT as far as the whole AI thing. They're right out in front. We did already come up. Now, the thing that I wanted to bring up is I had mentioned that on the earnings report, if they had a good earnings report, then perhaps we come and test that previous wave 3. Well, we did that before the earnings report. So now what? I have no idea, other than I think that you want to be really careful here. I know that a lot of people are down here looking for some sort of a move like this from their last earnings report. The stock is extremely highly valued. It's priced for perfection. Maybe they come in and just blow the doors off everything, and we do get a move to the upside. The algorithm is telling us that at some point in time, we're probably going to see 580 on Nvidia, but that doesn't mean it's going to happen on this earnings report. That's kind of coinciding with the next earnings report. So if you want to dip your toes in the water, I would encourage you to put perhaps a smaller position on. And if they have a good, I feel like it's going to be a good earnings report, but is it going to be a good enough earnings report to propel the stock higher from where it is now? I don't know about that. We've already hit the target I thought it might hit on a good earnings report. So I'm at a loss personally right now. So I'm just going to sit back and watch, and we'll trade it from there, see how things go following the earnings report, the commentary, etc. Maybe we get a big downward move, and that's a buying opportunity. I think if we move higher from here, it's going to be extended, and maybe that's a little bit of a selling opportunity. But if you're just dying to play the earnings report, then please put a small position on, whether you're doing it long or short, either direction. I know there's some people that have the opposite view that feel that there's going to be a big move to the downside on Nvidia. So it's pretty split from the whole Nvidia community, but we'll find out tomorrow. And then we get into Jackson Hole after that, and everybody will be analyzing the Fed comments. So we could get a little bit more volatility moving into the end of the week. So going back to the chart of the SPY, the fact that we haven't broken above the 440 level, I think you still have to be leaning just a little bit bearish here until we get back above all those major moving averages. I just feel like if we could come down to 420 and hold that level from a risk reward standpoint, that would be a better opportunity to kind of step in and go back to the long side. It just doesn't feel like this is going to hold to me, and I could be 100% wrong. I'm wrong a lot. So maybe that doesn't hold. I just feel like you want to be really cautious here on the market, and now on Nvidia, as before earnings, it already made the move I thought it might make after earnings. So that's pretty concerning. And then we go to the TNX, and nothing positive about that for anything in the tech world. We continue to march to the upside on interest rates. Very much a concern for me. There's people that have been asking on YouTube. We do the market update every weekend. We get a lot of great questions on the YouTube update. We do a live show on the Hub Financial channel. By the way, if you haven't visited that, go to the Hub Financial channel on YouTube and register there. And you can join us every Friday afternoon for the live show that we do. And we get a lot of questions on whether or not rates should start to come down, and why are rates going to the upside? With the fact that, maybe there's another Fed rate hike. There's a lot of commentary that maybe rates stay higher longer. But is there anyone, honestly, that feels that we're closer to more rate hikes than we are rate cuts? And I feel like common sense would say that we're looking more towards rate cuts. We may get one more rate hike. Are we going to get more than that? I would be very surprised. But yet rates continue to move to the upside. And the only other explanation for that is economic weakness and potentially global economic weakness. So if you're starting to look for rate cuts, you would be thinking that rates would be coming down. Not happening. So that's a concern. Maybe Nvidia is immune to that, and maybe I'm 100% wrong, and they just blow the doors off earnings and it sprints to the upside. I just feel like there's a smaller percentage chance that that happens. And the fact that rates continue to move to the upside is concerning. And then the dollar is doing the exact same thing. So you got rates moving up, you got the dollar moving up. There's no wave 5 pattern in the dollar. All of this is impulse. So we have a big impulse move here, really not enough of a correction even to look at a zigzag to the upside. So this is a big impulse move off of those lows back from July. So interest rates are moving up, the dollar's moving up. All that smells of global weakness moving into safer havens. So, I think we still have to be really, really cautious as to where the market goes from here. So, Zach, to answer your question, is a correction over? I don't think so. My opinion, nothing more than that. Doesn't mean a thing other than one person's opinion. I just feel like we've got more downside to go. I would be far more interested in the market in taking a shot to the long side at 420. So let's see if I'm right. We'll find out over the next couple of weeks with what happens as we continue to move forward from that. I did want to show the VIX because I mentioned last week, we came up here, 17 that had been support for so long is now resistance. We tried to break above it, but just like any other chart, you have to, and people ask me this on YouTube all the time, why do you show patterns on the VIX? Well, because it's a chart and charts have patterns, and what Elliott Wave does is basically, in an extremely generic standpoint, is measure investor sentiment. It's way more complicated than that, but if we wanted to get as general as possible, that's it. And what's the VIX? The VIX is measuring volatility, fear and greed. That's human emotions. So you look at this, we broke above 17, there was no follow through, and now we're back down testing 17 again. So we could come down here, and this could be a break of resistance, just a test, and then we bounce back to the upside, or it could be a failed break above 17 and we break back down below 17. We're not going to know that for the next couple of days either. But it is interesting to see that we're right here at that important level, and it could go either direction, and you could make a case for either one. You break resistance and you test it, and then perhaps we go higher, or a failed break above resistance and back below 17 we go, and that would be an opportunity for the market to move higher from here. To me, the only thing that could propel the market to the upside from here and create that breakdown below the VIX is if at Jackson Hole, the Fed comes out and starts to hint that they really are done with raising rates. They feel like they've accomplished enough. They're going to pause. They're going to wait and see how the economy works over the next, couple of meetings, et cetera. And then that could be read into that, they may be thinking that if there's some sort of a recession, if they're looking at economic data, then maybe rate cuts become back on the table. That's the only scenario that I can come up with as far as the fact that we bounce from right here and move to the upside. So anyway, just wanted to share you those things and answer Zach's question at the beginning. Let's take a look at the rest of the markets real quick. We look at the DIA, the diamonds, and you can see that we did break below the 350 level, and that was some sort of support, minor, but some sort of support. But the big support on the DIA is 340. You look at the wave 5, it didn't extend beyond 100%. You know that when a wave 5, at least if you've been watching, you know that when a wave 5 ends with less than a 100% extension, the move is back to the previous 4, which would intimate we're coming down to at least 340 and possibly just a little bit below that in order to get back to that previous 4. Also below the major moving averages, we'd gotten a little bit oversold. Have gone sideways a bit, closing on the lows again today. So we're below the 10, 30, and 50-day moving averages on the DIA. So I just feel like 340 is in the cards there as well. So taking a look at the Qs, and we see the chart of the Qs did okay today, considering the fact that we had interest rates and the dollar moving to the upside. Once again, you could have seen a much worse day. So if you're trying to find some sort of green shoots, as they call them, something positive to hang on to, if you want to go long the market, you can look at those and say, well, that could have been a much uglier day in the Qs than it was. And that's true. It could have been a lot worse. But I do see that we have this 360 level here, this potential support. The wave 4 is only at 26%. So that's the 23.6% wave 4 correction. That doesn't really count as a correction, in my opinion, and that's because I read Elliott's works. He would note it. The algorithm labels it because it is a fib level. But when you read his musings away from the actual criteria that goes into the algorithm and everything, he would say that he just doesn't have as much faith in the 23.6% fib level as he does in 38.2 or 61.8. So is this a continuation of the wave 3? Well, it's labeled the 4, so I don't think so. And I feel like maybe that's not enough. We're barely below the 10 and 50-day moving averages. We hit the 30-day on the high, but the 30-day moving average to me is not a major point of support resistance. If you've been watching this, you know that I look at the 10 and the 50. The reason that I have the 30-day on there is looking for crossovers between the 10 and 30, because I know enough ex-floor traders that tell me that that was something that they looked at on the floor. So that's a negative cross there. So you have a bearish cross with the 10-day crossing below the 30. So even though that doesn't look anywhere near as bad as it could have, how long are we going to hold up here? That's going to be the interesting thing. Now let's look at the IWM, which was kind of giving up the ghost. It has gone sideways here, but that's only because, in my opinion, it had gotten a bit oversold, and with this vertical move to the downside, we're at 185. We haven't quite made it back to 180. I just can't imagine that we blow through 190 like that, where the trading range had been from 170 to 190 for so long. And then we tightened up the level from 170 to 180. As you know, we broke above it, came back, tested it, got above 190. And all we could do is make it to the previous highs there, going back to August of last year, and then just vertically right back down through 190. Are we going to just hold in midair here at 185? I don't think so. I think we're going sideways because we got oversold. We're allowing the 10-day moving average to catch up. And I just really feel like we have to see a test of 180 once again on the IWM. It could hold here. Anything could happen. It's just hard for me to imagine that we stop right here without coming down and testing that level when it acted as resistance for so long. We broke above it and tested it as support. So to not at least come down and test it as support to see if it holds again, just that's difficult for me to imagine. Pardon me. So I feel like it's probably what's going to happen from here. Bitcoin, as we talked about last week in our insiders meeting, it did give up 29,000. Our insiders meeting we do on Thursday nights for our alert subscribers at EWOtrader.com, and we've been holding above 29,000. You had to be impressed that it held above it for so long, but wow, when it gave it up in a big way. And what I'd like to remind everyone is when we had this vertical move to the upside, to be very fair and honest, I was saying, yeah, it's very impressive that we're holding 29,000 after this vertical move to the upside, but you have to keep in the back of your mind that this was a vertical move up, and often vertical moves get retraced. So something that goes straight up often comes straight back down. So I mentioned both of those things. It was impressive that it held there for so long, but you couldn't load the boat yet, back up the truck, any of those things. And then here we go. So we get that vertical move back down. So the rules that I talk about so much and why I don't like vertical moves are all into play. So now what we look at with Bitcoin is here we are back testing that wave 3 high. We're at 26,000, came through 27,000 a little bit. Can we hold here? I would submit to you that we really need to hold here. We did have a wave 5 that extended beyond 100%. So when that happens, you start to look for, all right, if it's not going to go back to the previous 4, where are we going? Well, we go down to the 61.8% level. So that brings us down to just under 25,000. So that, if we're not done yet, if we can't hold here and we're oversold right now without much of a bounce, just a sideways move, you could very well see 25,000 on Bitcoin, and I would have a hard time going long with that chart right now, even with the halving and everything else that's supposed to happen next quarter. And we know that every time that's occurred, 6 to 9 months ahead, as markets move to the upside, we're in that time frame. Hadn't happened this time yet. Is it going to be the one that breaks the trend? Maybe. Nothing is ever 100%. It hasn't done it every time in the past, but right now, we're just consolidating an oversold condition. And, you can look at it and say, well, all right, we're at 26,000. And if you're saying we might go to 25, I'm okay with taking a shot now. I wouldn't begrudge you for doing that. If you wanted to put a little bit of money to work into Bitcoin with the history and what could happen in the first quarter of next year or between now and the first quarter of next year, totally understand that. But I will say that if you wanted to nibble now, and we break below 25,000, I think that's your stop, and you need to bail real quickly, because if we can't hold 25,000, who knows where we go? Likely at least back to this previous 4, which, as I mentioned, based on Elliott rules, it doesn't have to do that, but it could. And so let's see if we can hold somewhere in here between 25 and 26,000. So really interesting as far as talking about where those markets are. And I do want to show you a couple of the international charts. We got a lot to talk about tonight. So let's look at the INDA. And you can see from the INDA, doing okay, considering how bad things have been everywhere else. We had this really nice 45-degree angle move. I like the 45-degree angle trending moves, as you know. So we've come back. We're just at the 23.6% fib level. That makes me a little bit nervous, again, based on what Elliott himself wrote. Can that hold? It's labeled it because it is a fib level. Do we continue to hold and bounce to the upside from here? You can see that we closed dead on the 10-day moving average, looking a bit better than some of the other markets because we're still above the 50-day moving average. So let's see how the INDA plays out. Looking at the EWA for Australia real quick. And you can see that 22 is not holding. That is pretty concerning with the Aussie market. So we're a little bit oversold. And once again, we are in no man's land. And now we've labeled into a 5-wave pattern to the downside on the EWA. That looks pretty ugly to me. So if you were to get a bounce, we're a little oversold. If you were to get a bounce back up to 22, because we talked so many times about how 22 had to hold, it didn't. So is it going to stop right here? I don't think so. I feel like we're probably going to look at 20 at some point down the road on the EWA. I don't know when that'll be, but if you were able to get some sort of bounce back up to test 22 that was support for so long and it tested as resistance, that could be a really good short as far as a move to the downside. And then on EWG, we actually did send out an alert to our alert subscribers at EWOTrader.com on a continued move lower in the EWG, also in no man's land. We talked about this 28, 29 level for so long. We broke below 28. We took out the lows going back to the 6th of July. The wave 5 target here, which in a wave 3, if you remember, these are projected prices. Time and price projection is what these boxes stand for. And if you stay in the wave 3, for whatever reason, the Elliott wave algorithm likes that price at 26.5. So you could either bounce up, create a wave 4, and then come down to that level, or you could get that level from the continued wave 3 lower. And isn't it interesting that the very next area of support, of any kind of support on the EWG, happens to coincide exactly with that 26.5 level. So I think we're going there. The only question is, do we bounce a little bit first, or do we continue lower? I think that's a pretty good short right there. I think it's good enough that we sent it out to our alert subscribers. And speaking of that, I did want to share with you a recent alert that we did for our alert subscribers at EWOtrader.com. And this is on SNBR, sleep number. And it was in the time strategy. So that's our AI-based strategy that looks for stocks that are going to move in a sideways manner. And you can see we had this big move to the downside, which is what we look for. And then the AI gives us a score on the likelihood of staying in a 1 standard deviation move following that big drop. So we look for some sort of a sideways trade, calendar spread. Sometimes we get a diagonal, butterfly, whatever. In this case, we looked at a calendar spread. So the put calendar spread, and you can see that we moved to the upside a little bit. So we got a little bit of a bounce, but as the AI said, we're probably going to stay there, and you get the big move right back down exactly to the strike price that we looked at. That's amazing, isn't it? And this is why you need to have confidence in the trading system that you're utilizing. This is the biggest mistake in my mind that traders make, is they don't have enough confidence to stay with their trading system, and they bail too quick, and they take so many short losses because they bail fast, and it's a death by 1,000 cuts, and you just slowly erode your account because you're constantly reacting to something that happens. If you have a system that you trust, and we trust this AI system that we have on these sideways moves, the fact that we moved to the upside wasn't worrisome, even though when you come up here and look at this tap box, or this mark-to-market box, which shows where the position is every day, so it marks your position to the market, we almost were at a 50% loss. We were at a 49% loss, and a lot of you, if you had just basic systems, would have exited at that point. That means that you're just trading on some sort of hypothetical numbers, 100% gain, 50% loss, whatever it is. A lot of systems that are marketed out there because they kind of make sense as far as a marketing standpoint. But in the real world of trading, you have to hang in there with your system. And the way you manage risk that way is you put limited amount of money in each trade. Even if you lose 100%, you keep the risk limited. That's the way that you can trust your system and still not have big losses when you're wrong, rather than have some sort of an arbitrary system to where you're every time a trade goes against you, you're closing it out. Oftentimes, trades go the wrong way before they go the right way. And this is a perfect example. And in the end, we made a 33% gain in 2 weeks. And yet you could have exited at a 50% loss if you didn't trust your system. And this kind of goes into, I get asked this question all the time. What software are you using? And the software that I'm using is Profit Source. It's a software that's created by the Hub organization, HUBB.com. I've talked about it numerous times. If you look at the videos on YouTube, people are always asking, what are you using? Most of the time, people are asking, one, because I like Elliott Wave, but another reason because the charts are so clean and easy to see the patterns. And that's big for me because I like to see the patterns. And you've seen me show when we go and look for our case study considerations during TradeFinder. If you've been watching, we have those EWO blocks, which are my searches that the Hub organization graciously decided to include into the software for our alert subscribers at EWOtrader.com. But I've talked to them and I said, so many people are asking about this. Can you create some sort of a package for these subscribers from TradeFinder that are watching these and seeing it? And I was able to talk them into it. And so I've done this for you. So if you scroll down, you can see, I believe, Zach, if you can put this link in the chat box for all the people that are watching, you can see everything that the Hub organization agreed to include. So you not only get that software program, private source, the best Elliott Wave software that exists, in my opinion. And I always do the disclaimer, I've tried every one that I know to exist. Now, perhaps there's a few more out there that I don't know of. So I don't ever want to say I've tried them all, but I've tried all the ones that I know to exist because I'm such a believer in Elliott Wave. This one's programmed exactly to the algorithm as Ralph Nelson Elliott wrote it. And so there's no personal adaptations in here. It's right from the man himself. And look what's included. So they agreed to, I asked them to do this, to draw, because zigzags are my favorite directional tool. And then I also like triangles. And so I asked them to include those tools in their software program, and they did that. They're including that for you. Normally they don't get it. Nobody else gets them. So they've agreed to include those tools. So it makes it really easy to draw a zigzag. And then you can draw these triangle patterns, and it will label it as an Elliott Wave triangle for you. You get my trade scan course, so you learn how to utilize the scans. You also get a deep dive into the scan criteria. So you see all the information about what's the DMI. People always ask me, why does he like the DMI? What's the ADX? How does that work? You get all that information. So you get all that education as well. And you get all of this for a 72% discount for $9.95. So it includes the software, which is usually nearly $3,000 on its own. And then you get data, because the software is the software. You have to have a data feed in there. You got to get the data from somewhere. So normally people, when they have the software program, when they buy the software, then they have to pay an additional monthly fee to put data in there. So they're including a year of data in there. They're including the modules of EWO, which are my trade searches. So you can get all my trade searches, and you're going to get the trade scan course. So it identifies the confirming indicators that we utilize. So the education on what I use to create my entire technical trading system. Elliott Wave is the crux, but no one indicator is the holy grail. You have to have a technical trading system. So you're going to get every aspect of my technical trading system. So that's why when you go up to the top, it says Trade Like Rob, because this gives you the ability to do it. You're going to get the exact same software I use. You're going to get my exact same searches. You're going to get the tools that I asked them to create. They weren't part of it before I asked them to create these. And then you get the confirming indicators education in the trade scan course. And you get all of that right now for $9.95. So it's normally a $3,516 package. So you can get all that for, you're not going to see this price again. I know that sounds like sales BS, but this is true. And this is something I went to them. I battled them on your behalf, because I get so many questions asking about it. So if you're serious about this, if you really want to be a good technical trader, I'm giving you every opportunity here to go through and trade the way I do. And just so you know, I don't know the number of hours that I put into creating those searches. I would go to bed, because I mentioned before, you can create your own search parameters. So I would create a combination of parameters and go to bed. Let it run all night. Wake up the next morning, look at the results, tweak it, do it again the next night. I really don't have a record of the number of hours that I've spent putting in this. You don't have to do all that. It's all there right for you at a 72% discount of what anyone else would be paying. And we're doing that for you that have been our loyal TradeFinder viewers. So you can click on this button right here, order now, and take advantage of this opportunity. Go to this page, the link. You can read through it. You can see for yourself everything that's included. I've given you a rundown for it. But I think you'd be making a big mistake, especially right now when we're starting to get some twinges of downward markets. Man, you want these opportunities to make these quick profits to the downside. When things start to break lower, that's when you make a lot of money in a very short period of time. You can pay for this in one trade. So I wanted to share that with you because I went to battle for you. They begrudgingly agreed to do it. And there's some really cool things that are going to be coming out with Profit Source that you're going to love if you take advantage of this offer. So they're continuing to improve the software. We work together on this with ideas, etc. So anyway, I wanted to share all those things with you, and I hope that you will go through and take advantage of that. You're not going to be sorry, regardless of what software you're using. That's not just a software package. That's an entire technical trading program right there. All right. So there's where we are with the EWG. Let's take a look at the case study considerations that we looked at. We only had 2 left. And so if you've been following TradeFinder for a while, you've seen the performance of the case study considerations. And we cleared a lot of the bullish ones out before we got this little correction. So we had this upside one here on site 1 landscaping. And so it's kind of in that area. You're going to look at the one that we did and then we missed the week before last. So with Home Depot, the only thing that was looking long is in the whole home sector. And that's because we're starting to see a few chinks in the armor here, especially with people with existing homes. They're not selling them. They're not trading up. They're not trading down. They don't even want to downsize because they've got a 3% mortgage and they don't want to go to 7 or 8, even if they're trying to downsize, because you're going to get a smaller house and pay more for it. Makes no sense. So we look here, and last week we looked at this, and it did break below the 160 level. That was the area that we said needed to hold, and we were holding the 50-day moving average. So hopefully you remembered what we talked about last week. As long as we stayed above the 50-day moving average, you stay in it. It broke below it. You should have gotten out of it right here on the 16th. So it would have been the next day, because that's when it closed below the 50-day moving average. So cross that one off. We'll take that one as a loss, a rare loss. And I think I can pretty much count on one hand, definitely less than 2 hands, the number of losses that we've had over the years of doing TradeFinder has been pretty amazing. Now on Home Depot, it's hanging in there pretty well. And so I think we hold on to this one with Home Depot. We've had like a 4-point move lower, and we're right here at the wave 4. So maybe SITE turns and comes back. If you look at it, you could make an argument, well, we haven't even gotten to the 61.8% fib level yet. So, if you didn't get out and you want to stay in it, all right, well, you might as well stay now because we could bounce from this 61 point. You know how strong the 61.8% fib level is, but we were talking about the 50-day moving average before. And as far as Home Depot, it's hanging in there really well. So I don't see any reason to bail on Home Depot just yet. Maybe that changes. We've got a whole bunch of support. Look at that right in this area here. There's all that congestion right in this area. So I don't see any reason to bail on this one. And if you didn't get out of SITE and you want to say, maybe I'll just add to it at the 61.8% level and see what happens. Dollar cost average down a little bit. If it breaks below that 61.8% level, then you're definitely out. So if you didn't get out before, that would be the out for sure. So even here, going against what's happening in general market, we're still holding in there pretty darn well. And if the market does calm down, you can make a case for these stocks, especially, let's see when the next earnings report is for Home Depot. And you can see, well, we just had one. So we'll hang in there for a while. So that was a good earnings report. That arrow to the upside means they beat earnings. So just a little bit of a pullback following an earnings beat. And where's the information that's going to tell you that this likely doesn't, and you could make an argument that it probably does better on the next quarter, because who in the world is going to sell their existing home right now and increase their mortgage payment for a larger or smaller house? That's one of the things that I know we don't talk a whole lot about fundamentals, but that's kind of a common sense thing, in my opinion. I think, why would you do that? I don't think it makes any sense at all. So we can take a look at our scanners, because I do want to show you this. This is part of that package that I arranged for you. Don't leave me hanging out to dry here. I really went to bat for you guys on that. So you take a look, there's 0 on the impulse, there's 0 on the correction, very low number on the consolidating stocks. In other words, this is an extremely hard market to trade. So what I want to do is when we have this kind of a scenario where we don't really know where things are going to go, I'm just going to kind of put my money where my mouth is. I'm going to let you know what I'm going to send out to our alert subscribers at EWOtrader.com tomorrow based on where we are here. The only way I wouldn't do this is if we have some sort of a huge negative open tomorrow. I don't think that's going to happen right now. The futures are up 12, so that's good. That's what we'd like to see. So what we're going to do is we're going to send out a butterfly down around 420. Butterflies are, from a directional standpoint, if you put on an out of the money butterfly, again, you want to learn more, get the education that is included along with the software. The 420 level seems to be the point. Now, you don't have to do a butterfly. You can create any sort of a downside trade. Remember, at TradeFinder, we just give you the opportunity, the consideration, and you kind of figure out the trade for yourself. But I gave you a little bit of an idea of what we're going to do for our alert subscribers tomorrow. But my point here is that we are going to send out a trade with a very low risk, high potential return. So if we're wrong, the risk is small. If we're right, we can make a really nice return on the fact that we're likely going to see that 420 level at some point in time in the not too distant future. So you can put on bearish spread, you can do puts, you can do whatever. We're going to send out the trade that sets up the lowest amount of risk with the highest potential return. So that's the benefit of having the alert service. So rather than spend time trying to come up with something else, I just thought I'd give you a precursor of what we're going to do for the alert subscribers tomorrow. It gives you an idea to see. If you want to become an alert subscriber, you can go to EWOtrader.com. If you want to take advantage of some potential quick returns on downward moves, it certainly looks like we're setting up for that. Everything could change. Maybe the Fed flips again and becomes extraordinarily dovish and the market rallies to the upside. If they do, we'll have plenty of upside opportunities. I don't see that happening. I could be wrong. I think we're going to have some really cool downside opportunities and really love to take advantage of that. And here's one just to show you that I didn't think this was enough of a move potentially to the downside to send out an alert. And, you look at it and you could have found the potential target from the zigzag here was a dollar move to the downside. And when you started looking at the options, especially when you're looking at downside options, there wasn't enough of a gain to warrant the risk. And lo and behold, does it not go down $1? It goes down $4. Would have turned out to be a great trade. You can get access to those things yourself by taking advantage of the software. And maybe you might not have been as cautious as me, and you would have taken advantage of that move, and you would have been smiling all the way to the bank today. So that's really frustrating. But you make the best decision at the time. Software called it though. So anyway, so that's it, Zach. Babbled on here for a couple extra minutes. I think we had a couple extra minutes of Q&A, so I'm taking those back this week. So I'm open to a few questions here as we close out tonight.
All righty, yeah, that sounds great. I don't think anyone will be upset with that. I was doing a bit of multitasking between the streams here, and did we do a case study consideration for this week?
I did. I told them that we are sending out an alert on SPY going down to 420, and there's a whole bunch of different trades you can do. We're going to do a butterfly, but you can do different strikes. How much risk do you want to take? How much money do you want to spend? How wide do you want to make the strikes? So I'm already telling them that we're going to do a butterfly, but you can create your own out of the money butterfly depending on the amount of risk that you want to take. But we'll be sending it out based on what I'm comfortable with and what stays within our guidelines that we've committed to at EWOtrader.com. So we're looking for a downward move on the SPY to 420. That's what we're doing for tonight.
Yeah, no worries at all. I'll go back and watch the recording as I always do. I can retain some of the wealth.
I can't understand why you can't do 20 things at once and listening to what I'm saying.
Yeah, there's only only so many eyes and hands that I have to be able to monitor and manage these streams and all the other.
Well, you do a great job. You did hear that I already did your NVIDIA, right? So we don't have to do that one. So we got that one out of the way already.
Yeah, absolutely. All right, let's get into some questions for everyone. So real quickly, this is a just a visual. If you wouldn't mind showing where you can find the earnings indicator. So if you click on that CE down there at your
right over here. So this is one of the really cool things about the software here. So you can see where it says favorites, because if you click on this downward button, there's a whole bunch of tools there, tons of them. I believe every indicator that I'm aware of is included here. So if you have your own favorite indicator, so you go under highlights, there's a bunch more indicators that are included there, which happens to be where CE is. So that's the earnings report. And then you go down to indicators and there's a ton more. So rather than going through and clicking those buttons every time that you want to go through and put one of these indicators on your own charts, you right click on it and you see right there where it says add to favorites. And so then all you ever have to do is keep that favorites tab open, and then all of your favorite indicators are right there. And you don't have to go through and search through all those different indicators every time. It remembers what you put in your favorites. And so you can see them every time. So CE is company earnings. So it's under highlights, but you can find it there. So
that's perfect. Yeah, thank you, Rob. It was a perfect visual there. And we always had a subscriber asking, saying they couldn't see it under the same folder. So I would just say scan indicators or highlights. And then as Rob said, you can move it into the favorites over time. So I saw we had a hand up from Albert here. We unfortunately don't have time for voice questions in this session. However, we do encourage voice questions during our insiders meeting when there's a 45-minute Q&A portion. So please feel encouraged to come back then. We'd love to hear your voice for that. All right, let's get right into the questions now. So this is going back to the S&P, which I know we've talked about a fair bit, but as everyone knows, we can only get through so many questions in this session. And Larry informed us that it was a question well thought out that, of course, wanted the answer to, but we weren't able to get to it last week. So that's why we're going to prioritize that one for this week. I asked this question last week, but since it deals with the S&P 500, anyhow, before the S&P started labeling the downward four wave, it showed a tap box in the 420, 430 range. As soon as the four wave was labeled, the tap box went away. My question is, even though the tap box is no longer showing, isn't this still a good target range for the current wave four pullback or corrective wave? It seems logical that this, coupled with other points of support, would make this a good target. I have not heard any discussion on this and would love Rob to educate us.
Okay. Yeah, well, the tap box is time and price projection. And so remember what that wave four, when it's labeling the tap box, says is that if the wave four starts, that's a point where perhaps you find some support, and it's likely the point where the wave four is going to get labeled. So the wave four is labeled. Will it hold? Maybe, maybe not. The tap box is just a projection. And so because the projection was hit, the tap box goes away. And now you start looking at, okay, we're in the wave four. If we don't hold right here where the tap box was, that's been satisfied. It did what it was supposed to do. Where could we go if we go lower? That's when you start looking at these fib levels. So we're pretty close to the 38.2% fib level. Maybe that holds, maybe it doesn't. I've already said I kind of think we're coming down to 420, which I think would be more of a 50 to 61.8% wave four move to the downside. So once something that's forecast happens, that forecast goes away, and then you move to the next set of criteria as far as what happens from there. So that's what happened here. Yes, it said that we could go here. We did. We've labeled the wave four. So that happened. It goes away. And now we move to a different set of rules. Okay, that happened. What could happen now? Could we hold here and bounce higher? We could. We could absolutely stop right here and start on the wave 5. Now, remember that wave 5 projection is based on if we start the wave 5 from here. And at some point, if we are, the wave 5 will become labeled and we'll look for a 480 target. The wave 5 is not labeled yet. The 4 is still labeled. So at this point, we're still looking for, is that the end of the wave 4? Or could we start the wave 5? And we don't have that information yet. So the fact that it's done what it's supposed to do, we watch this. So I've said, I feel like that's not the end of it. I could be wrong. That may be the end of it. It is a pivot point. And if you're wondering what does a pivot point mean, that's when you have a bar with the low, and then the next bar is a lower low, and then the next bar is a higher low. So it leaves this one bar down here on its own. That's called a pivot point. And pivot points can act as lows. So that could be the end of it. Maybe the Fed comes out and says something in Jackson Hole that's really dovish, as I said, and off we go to the upside as the market then begins to look towards rate cuts. That's a scenario that could very well play out. I don't think that's highly likely based on what the Fed has been saying, but they flip-flop so much. Who's going to put a whole lot of weight in what the Fed may or may not say? We just have to wait and see what they say. So my feeling is, at least at this point, they're going to stay hawkish, and the market is kind of trying to get prepared for some sort of a dovish move, and we take off. If they don't, I think we see 420. I think if Jackson Hole comes and goes and the Fed rhetoric stays really strongly hawkish, then I think we see 420. But there's your scenario on where this wave 4 could hold. If the Fed comes out dovish, I'm clearly saying we could be off and running. I just don't think that's what's going to happen. But could it happen? Yes, it could.
Very well. All right. Thanks, Rob. I don't want to take any Q&A.
No, I mean, that was really good, because I really do like giving Elliott wave explanation, because there's the information that's on Elliott wave out on the internet is so damn basic that I'm a believer in nothing worth having comes easy. And I know not everybody believes in that. And I feel like you need to put your time in. And if you put the time and effort in, you get rewarded for it. Elliott wave is not an easy technical system. It wouldn't be so good if it was, in my opinion. So it aggravates me when you see some of the really bland, basic, generic stuff on Elliott wave. When if you really go into reading the stuff that Elliott wrote, it's so technical, it's unbelievable. So when I get an opportunity to explain things, I like to take it. So thanks for bringing that question up, Zach.
Absolutely. And I always appreciate the explanations along with everyone else. So I'll just rapid fire some symbols for you.
Okay, let's go quick.
Tesla.
Figured that was coming, and Tesla got awfully ugly. But gosh, I feel vindicated on this one, because I told everybody. And I know people love Tesla. And, you know, Elon said it's going to be rough. It's going to be, you know, we're closing factories down. And didn't think that we were going to hold here. Didn't see how we would, and we didn't. But now we've come down and we're at the 61.8% fib level. The strongest fib level, in my opinion. And Tesla's bounced. So we had a doji right at the 61.8% fib level, and you got to bounce. Now, the question is that the end of the downward move? It could be. We closed right on the 10-day moving average. We traded above it. I would submit that I would like to see Tesla not just get back above the 50-day moving average, but I'd like to see it get back above 250 and get up into this 260 range to feel like, all right, that's the end of it. But we came down here to this area where there was support. We're at the 61.8% fib level. So if everyone's looking for, man, I'd really like to take a shot at Tesla, you might have an opportunity now. You're still bearing some risk if you go long when you're below the 50-day moving average and you're below resistance. But if you have some really speculative money, some play money sitting around, and you're like, you know, not going to hurt me if I lose this money, then you could start to look at that. But if you want to be a bit more cautious or conservative, let's let Tesla continue to bounce, get back above the 50-day moving average and back above 250, and then you can go long. So as you know, if you've been watching, I try to give a more aggressive stance and a more conservative stance. So that's where I am on Tesla. But
All righty.
yeah,
We're gonna
pretty
go over
much
to Johnson
downward
and
move happened spot on. Next, what's next?
so we're going to go over to Johnson and Johnson for our first time live session attendee and new subscriber Sue.
Oh, welcome. Thanks for joining us. Johnson and Johnson, you would think it kind of ran to the upside, is where money would go to hide. And perhaps this downward move has to do with a little bit of cash raising just in case the Fed comes out a little bit dovish here at Jackson Hole. It's well above this area of support here at 165. I would be really surprised in this current market unless if the Fed does come out and says, hey, we're done, we're happy with what we've accomplished, and all of a sudden the Fed fund future starts pricing in rate cuts and all, then money is going to leave stocks like Johnson and Johnson, and it's going to start to look back for the higher beta names. That's the scenario where we could go much lower. But I would submit to you that right now we're oversold. We're right in the area of where we should find support. So if you're long Johnson and Johnson, I would stay there. If you're looking for something with a good opportunity to go long that gives you a little bit of defensive protection in case, you know, we have a bit of a heavier recession than people are thinking, I think you got a gift here on taking advantage of J&J around 165. So I think you could take a nibble here.
See, we're at the hour. You got a time for a few more?
Yeah, let's do two more.
Two more? You got it. What are we thinking about Ford right now?
Ford, gosh, we haven't looked at that one in a while. Man, Ford, the story, and we could spend 30 minutes on Ford. They made such a gamble on just going all electric, except for a few F-150s. That was a big, big gamble, and it looked like it was paying off, right? I mean, initially it looked like everything is going good, and then all of a sudden Ford comes out and says, well, you know what? The demand for all electric vehicles is not quite as high as what we thought it was. That's what they said. And so down we go, and here we are right back. So this becomes challenging for me because they've already said the demand is lower than they thought. They're committed to this. They retooled all their factories, a la what Tesla's doing, although they're not changing, you know, from combustion engines to electric vehicles. I don't know what to say about Ford at this point in time. I feel like Ford probably is going to trade in a range in here between 13 and 11. I think if you wanted to look for some sort of a sideways range bound trade, I think that's where we're going to find Ford. I don't see the catalyst now to break it above 13. I'd be shocked if it broke below 11. So I think we're in a range here. So I think Ford's going to be range bound for a while. So unless you put some sort of a sideways trade on, it's kind of dead money in my opinion. Yeah, you know, they admitted that they went too hard, too fast to the EV side of things. There's still few people out like me that like to hear the rumble of a V8. I think that's what it matters. I know the world's going electric, but there's still a few of dinosaurs like me out there.
Well, I don't think you're alone in that, Rob. So I think it's showing right there as a reflection on the chart. So at this time, I just want to remind everyone that if you enjoyed this webinar this evening, please go ahead and smash that like button for us. It goes a long way, and we do really appreciate it. We never get through all of the questions for any TradeFinder live session. We wish we could, but there's only so much time in the day. And so we encourage anyone who didn't have their question addressed during this session to attend the insiders meeting on Thursday, where there is a 45-minute Q&A portion. I know what my eyes are going to be on watching earnings coming up for one of my favorite stocks, but I'll wrap up this evening with a question for you, Rob, on BABA from one of our subscribers, Tony, wondering if there's any association on impact to the correction, or sorry, any association with the correction with the China impact.
Well, you know, let's look at Obama and Biden. And I'd like to further what you said, Zach, because not only do we do a few questions here, but on the Hub Financial channel, we do a few on the live show on Friday. But if you become an alert subscriber on Thursday night, we answer every question. So yeah, we just don't have time to get through all of them on these other two opportunities. But if you want to guarantee that your question is going to get answered, then become an alert subscriber at EWOtrader.com. Join us Thursday night where we answer them all. So yeah, you're spot on there. So here's Alibaba, which is hanging in there pretty well, especially considering, we're getting mixed signals out of China. But to me, this goes along the lines of Disney. And so here's DIS, and I'm going to bring up Baidu. So I'm going to do a three-part final to your question here, Zach. I did DIA, DIS. I meant kind of along the lines of how much more bad news can come out on Disney. And as long as it holds above 85, I think this could be a long-term opportunity on Disney. Now, if it breaks 85, you got to get out. That's your stop, because then it's a Katie bar the door time. Who knows where it goes? But as long as it stays above 85 with all the negative stuff that's come out, perhaps you can have a long-term opportunity. I feel the same way with these China stocks. So here we have BABA. So we move back up to the previous four. We're kind of in a trading range. That's what usually happens. So you have the wave 5 down, you go back to the previous four, and then you go into consolidation and you wait to see. So we're waiting to see what the next move is going to be. So right now we're in a trading range, I think between 80 and 100 in Alibaba. But if we could take a signal from Baidu, let's look at that one real quick, because we're kind of talking about the same kind of thing here. You can see that in this range, we got a bit of a bounce today. Granted, from an oversold condition, but look how this area here at 120 has held. So it kind of ties into the theme of how much more bad news can be priced into the China stuff. I think you're going to find, if the Fed stays hawkish and interest rates stay high, the dollar stays strong, money is going to leave the Magnificent Seven and all those stocks, and it's going to be looking for other opportunities. And it's only a matter of time, in my opinion, before some money starts looking to China's going to be better down the road. When down the road, who knows? But gosh, I mean, they shut the whole country down for an extended time. The government was, after them from a regulatory standpoint. What else is there? Now, I'm not saying that this is going to make you money over the short term, but if you're looking for something for a longer term, especially when maybe we don't have quite the great opportunities, if we move into a recession, whatever, I think these are some places that you can look. So wanted to share that with you. Thanks everybody, as always, for your attention. Hope you enjoyed that. We very much appreciate your time. Time's the most valuable asset we all have. And hopefully, since you devoted your valuable time to us, you found it informative and educational. Take advantage of that software deal, and let's look at charts together moving forward. Take care, everybody. Have a great night.